Well, good morning and welcome to Market Day. I am Scott Shellady, otherwise known as the Cow Guy. We've got tons to talk about all day today, so if you can, stay with us. But let's jump right in. We had a limit down day in corn yesterday. Today, it's continued in that vein, but not as much. It looks as though the markets are waking up to the fact that we did have a tight report last week, and we've got another one coming on Monday. So if we go back to the corn market and see how we're doing today, and at the same time, I'm going to try to do two things at once and bring in Chris Swift from Swift Commodities. Chris, you there?
Sure. Good morning, Scott.
I've got a corn chart up, and we're off about 7 cents-ish. Yesterday, the synthetic corn market, and we talk about synthetics when we have the options in the corn market, was limit down. It was about anywhere between 3 and 5 cents all day. So this is probably in the same neighborhood, in that same vein. And it looks as though it's kind of a more of a muted session. What are your thoughts quickly on the grain markets, and/or we can talk about soybeans as well?
Well, we've started to consolidate. So that's the biggest thing that we noticed. We had the huge run-up by the end of May. Now we have begun a consolidation phase, and we're waiting on two things. We're waiting for pollination now to come about, see how well that is, and then we're still very concerned about that top fourth quadrant of the corn belt that has seen all that heat, and whatever rain this comes through, how good is that actually helping that corn crop that's been damaged?
So for those that are at home, we had the corn market off about 7 cents. We're looking at beans here now. August contracts up 18, and Novi beans new crops up 16 3/4 cents. Last is $13, 21 3/4 cents. You know, I was just doing a little bit of radio, Chris, and it was the question really, I think, for the rest of the year, at least until we get the machines in the fields, is how bad is the bad part going to be versus how good is the good part going to be? What do you think about that?
Sure, and no doubt the good part, especially by the crop ratings, what we've seen is going to be good. I think at worst you lose 2, 3, 4 bushels of yield in those areas. I don't think you're going to lose the corn crop in any way, shape, form, or fashion, but you will have a reduced yield there. And in some portions of those areas, they are major corn areas.
So I feel as though, and I'm going to talk about this all morning, but I feel as though we had the knees taken out of a lot of the market yesterday across the board. And it was really kind of understated, but we saw the action that we had in the grains because of this rain that we got over the last 3 days. It was probably not expected, or at least the market told us that on Tuesday. But, you know, if you go look at other things across the board, we really had inflation taken out of the equation, or at least kind of put on the back burner. And what I mean by that is that 10-year yield crashed to 1.34%. And crash is probably not the right word, but 1.34%, which is the lowest we've seen in a while. And that really tells me that the market, and those that are playing this market as well for the inflation trade, are really kind of putting that inflation trade on the back burner here for a little while. So it'll be interesting to see how all these commodities, both proteins and the row crops, wake up to that fact, and we'll see if those inflation traders stay in the market. What do you think?
Well, it's going to be difficult, but we noticed gold's up again this morning, silver's up a little bit. The energy markets kind of teeter back and forth on positive, but the energy markets made new contract highs on Monday night. We've seen the metals markets improve just a little bit, and all but the one day, people forget that we were limit up last Wednesday on corn. We come in limit down on Tuesday, for corn. It's an extremely volatile market, and it's not going to slow down anytime soon. Well,
I'm happy that people have a short-term memory, because every day we have something new to tell them, right? So they turn in and watch the show. So let's take a quick break right here, and we'll come back and talk about the proteins. Well, welcome back to Market Day Reports. I'm Scott Shellady, otherwise known as the Cow Guy, and that's a great segue to talk with Chris Swift from Swift Trading about cows. Let's jump in and look at live cattle. Chris, is there anything, what's jumping out and looking, what are you looking at here? You're the Hank Aaron of the cattle market, so I'm not going to sit here and try to tell Hank Aaron how to hit home runs. Why don't you tell the rest of us how you do it?
Well, we're finding some real interesting in the feeder cattle market. So we understand that it takes a contract of corn, a contract of feeder cattle, and end up and you make fat cattle. But the fed cattle revenues have been falling very short of what those two input costs. But today, over the last probably 3 or 4 days, we've seen the feeder cattle market really perk up heavy. Somewhere or another, cattlemen are either finding a new revenue stream instead of the fed cattle market, or they are really assuming some tremendous amounts of risk looking out into the future of the fed cattle market.
Well, as Chris talks about feeder cattle, we've got CSEP up about $3.30, 162.72. We'll quickly jump over to lean hogs as I'm running out of time here, Chris. Anything there that we really should take note of?
Not really. The basis spread is going to continue to work. It's very wide, and that's more likely what you're going to see is more convergence of basis in the hogs.
Well, there it is. I was going to say we heard it from the horse's mouth, but it's probably better if we say we heard it from the cow's mouth. So thanks very much for joining us today, Chris. That's Chris Swift from the Swift Trading Company. Over to you, Tammy.